So today we're going to be reviewing reverse mortgages. I've been looking forward to this podcast for the last 6 months. We're going to be going over the pros, the cons, and it's my intention to cover the program A to Z. So I'm going to be explaining the reverse mortgage program the same way I do when I sit down with a borrower after they've shared with me what their goals are and what they're trying to achieve with the property. So the first thing that I think I always try to get across to borrowers when we're discussing reverse mortgages is that a reverse mortgage is in fact a mortgage. And I know it sounds repetitive, but I find that one of the main myths that a lot of people have regarding the program is that they're somehow selling the property to the federal government or somehow selling or transferring title to the property to a bank. And that is 100% a myth. A reverse mortgage is, or the main reverse mortgage category is an FHA loan. So there is an application process. The borrower or the property owner needs to qualify for this program, and they are not selling the property. They are simply applying for a loan. So they are extracting funds from the equity in the property. So what makes a reverse mortgage special or unique? Well, there's a lot of things. And in my opinion, one of the main benefits to the reverse mortgage is that it's a non-recourse note. So that's something that you guys need to really jot down. And I'll get into what a non-recourse mortgage is, okay? It's a very important term, and it's something that really sets the reverse mortgage aside. And to me, it's the most important factor about a reverse mortgage. It's the most important aspect of a reverse mortgage. But for a lot of property owners, obviously, what makes the program unique and attractive is that when you get the funds, when you qualify for this loan, you end up with zero monthly mortgage payments. So you have a mortgage and you're not making payments on the mortgage. Obviously, you continue to pay your taxes, your insurance. If you live in a condo, you continue to pay your association. If you're part of a PUD and there's a homeowners association, you continue to pay the homeowners association. But there are very few, I think we can all agree on one thing, there are very few loans that are available in today's market where you actually get money and then you have no monthly obligation, right? But that's what most people know about a reverse mortgage. That's where it ends, right? So today we're going to dive in and we're going to really try to understand this program. So the question is, how does a reverse mortgage actually work? So we're going to dive into that right now, okay? So the first thing that I share with the borrowers is the fact that if I want to consider a reverse mortgage, the first thing that I should do is just really get educated. But once if I find that it's a right fit, I submit my application. There is a counseling that happens, which is great because it's educational. But once I've done the counseling, once I understand the program, I basically submit my application with my lender, right? Once I submit my application, the first thing that the lender is going to do is they are going to send an appraiser out to the property to determine the property value, right? So that's where we start with the explanation, right? Let's use a simple number. Let's say that my property is worth about $200,000, right? So this is just an example, right? The appraiser came out to the property, they appraised the property, and they call me and they say, hey, Mr. Lopez, we got the appraisal back and your property's worth $200,000. Now, in a reverse mortgage, there's not a set loan to value. So I can't say, well, you're going to get 50% or you're going to get 60% or you're going to get 40% because it's actually a graph based on the age of the borrower, right? But historically speaking, the average seems to be about 50%. So let's say that my property appraises for $200,000, I'm going to get a call from the lender. They're going to share that information with me, and they're going to say, look, Mr. Lopez, you qualify for a $100,000 reverse mortgage. So my property appraised for $200,000, and they are offering me a $100,000 loan. Now, I don't have to accept that loan at that point. I can decide to walk away. But if I have an interest in receiving those $100,000, there's a purpose that I can put that money to good use for, then I have the option of accepting those $100,000. And if I do, what makes the reverse mortgage attractive is that once again, I have zero monthly mortgage payments on the $100,000. But very importantly, and this is a key factor here, I continue to be the universal owner of my title and my property. I continue to use my property. The bank does not touch the title to my property, and the federal government definitely does not touch the title to my property. I continue to be the universal owner. So what does that mean when I continue to be the universal owner? It means, right, primarily that I continue to have many of the same obligations and many of the same responsibilities and many of the same rights that I've always had as a property owner. So, number one, I continue to pay my property taxes because the property belongs to me. I always kind of jokingly mention that, paying property taxes is not a condition of the reverse mortgage. It's a condition of being a property owner in the U.S. So I continue to pay my property taxes. And because I do have a loan, I have to get insurance. So I continue to pay my property taxes, my insurance. And as mentioned before, if I have to pay an association, I continue to pay my association. But I also have many of the same rights. For example, let's say that I close my reverse mortgage on 100 and I get my $100,000, right? Well, if that's the case, and let's say a week goes by and I completely change my mind. I wake up one morning and I decide, why did I do the reverse mortgage? I really just wanted to sell my property and downsize. I have the absolute right to put my property on the market and sell it. And if I'm able to sell it, not for the $200,000, which is what the property appraised for when I applied for the reverse mortgage, right? Which maybe I agreed with or maybe I didn't agree with that value when the appraisal came back. Let's say I put it on the market for $400,000. And I'm able to sell my property for $400,000, then I'm going to sell for $400,000. I'm going to obviously have to pay back the $100,000 and any interest that accrued during that week, right? And I get to keep the difference, right? So, if a week later I decide to sell my property and I sell it for $400,000, I pay back the $100 plus any interest that accumulated in that 1 week, which shouldn't be much. And then I get to keep around $300,000 worth of profit. So why do I start with that example? I start with that example for two primary reasons. Number one, I like to use that example because I want to point out the fact that there's no prepayment penalty with a reverse mortgage. So when you're doing a reverse mortgage, there is absolutely no prepayment penalty. I get to sell or refinance or pay off the debt at any given point. So if I decide to sell, I can do it. If I decide to refinance with a reverse mortgage or with any other financial product, I can do it as well as long as I qualify. Or, if I win the lotto or I sell another property and I have all of a sudden some cash, I'm able to pay off that reverse mortgage with no prepayment penalty. The second reason I mentioned or I share that example is to illustrate the fact that the difference between the loan amount that I was given with the reverse mortgage and, again, any interest accrued, the difference between that and my actual sales price in the future continues to be the equity that I'm entitled to as the owner, as the universal owner of my property whenever I decide to sell. So if I decide to sell and I sell my property for $1 million and my debt is $200,000, I have $800,000 worth of gross profit that I get to pull out and it goes into my pocket. So once again, it's very important to understand that committing to a reverse mortgage, it's not a final decision. I can have a reverse mortgage on my current property, then decide to sell, then buy another property. And in fact, there's the reverse mortgage for purchase where I can actually qualify for a reverse mortgage when I'm buying the property. We're going to be covering reverse mortgage for purchases in another podcast. That's a whole different program that in all honesty, very few people know about. But when you do know about that program, you can really put it to good use. And we'll be covering that program as well. But the point is that reverse mortgages are not a final decision. I can have multiple reverse mortgages throughout my life after I turn 62. I just can't have more than one reverse mortgage at a time because reverse mortgages are basically meant for my primary homesteaded property. Okay. So in this example that we have here on the board, we have a property that appraised for 200. I get $100,000 and I end up with 0 monthly mortgage payments, right? Everything is fine. I continue to be the property owner. I continue to enjoy my property and I have no monthly mortgage payments, which is once again a very attractive proposition. But something doesn't quite fit, right? Because the question that everybody should be asking at this point is, well, if the bank just gave me $100,000 and I have no monthly mortgage payments and I continue to be the owner of title and the bank doesn't take possession to my property, then how does the bank make its money, right? That's the key question that I think kind of lingers in the back of our minds, and we don't really know the answer to it. And that's where I think a lot of the myths surrounding the program really come to fruition, right? So let's talk about that, right? Well, I mean, the answer is clear. There is a benefit to the bank. There is a profit that the bank will generate. And we're going to discuss, I promised you that we were going to talk about the pros and the cons, and we're going to talk about every aspect with the reverse mortgage. So I'm going to share with you how the bank makes its money. And to do so, the first thing that we have to do is simply analyze how a reverse mortgage behaves over time, right? So let's say that, or let's analyze how the reverse mortgage behaves in the first 10 years. And I say in the first 10 years because another benefit to the program is that there's no term to it. So we all know that that regular mortgages are what we call in the industry forward mortgages. When you've been in the industry as long as I have offering reverse mortgages for the last 25 years, everything else then becomes a forward mortgage, right? So forward mortgages tend to have terms, right? So they're, for 10 years or 15 years or 30 years, etc., right? There's even 45-year mortgages, conventional mortgages, but reverse mortgages do not have a term. So if I live an extra 100 years after having done my reverse mortgage, the program will last for the next 100 years. It's basically for the rest of the borrower's natural life. And obviously, in the case of a married couple, it's for the rest of the natural life of the married couple. But let's analyze how the reverse mortgage actually behaves in the first 10 years. So to do so, we have to talk about property value, right? Because, if 10 years, which is a decade, go by, with my property value, really there are two potential possibilities, right? My property value can go up. Let's say that in the first example, my property goes up to $300,000. But my property value, I'm a survivor of 2008, and I saw property values really take a dive. So I always like to talk about every potential possibility. So let's say that in the second example, my property goes down to $100,000, right? So in the first example, my property appreciated. And listen, I live in South Florida. We're licensed in Florida, Georgia, and Texas at this point, and all markets are a little bit different. But I think that one of the constants in the market is that because of inflation, which is a word that's in style right now, property values tend to go up. That's what we normally tend to see. But we, again, as survivors of 2008, those of us who had properties at the time know that when a crisis hits, property values can really suffer and they can also go down. So, you want to hope for the best, but you need to also prepare for the worst and really understand how any program, not just a reverse mortgage, anything that you're doing, any decision, how it would be affected if your property value goes up or if the property value goes down. So we're going to talk about both. We're going to talk about my property value going up from $200,000 to $300,000 in 10 years. But we're also going to talk about the flip side of the coin and see how the program behaves if the property value goes down to $100,000. So let's not forget that I received $100,000 when I first did the reverse mortgage. I pulled out that money and I put it to some good use. We'll talk about the different ways that you can use the funds from a reverse mortgage. But I will point out that another attractive aspect to these funds is the fact that they're tax-free. So I don't have to declare them as income, and I pay no taxes on the money that I receive from a reverse mortgage. But we'll talk about the ways that I can receive them. There is a line of credit feature where I don't basically have to take the money right away. We'll get into all of that, right? But I did get the $100,000 and I did put that money to some use, right? And hey, it's great the fact that over the last 10 years, I've basically had no monthly mortgage payment, right? I've just paid my taxes and my insurance. And it's also great that I've enjoyed my property. So those of us who are in love with our property, we didn't have to sell, right? We got some money out of it. We used that for our retirement. We put that to some good use, and I continued to live in the property. But 10 years later, if I decide to pick up the phone, right? I really don't have to pick up the phone and call a bank because they're going to send me a monthly mortgage statement. But if I pick up the phone and I call my bank and I tell them, how much do I owe you right now? What's important to understand is that it's not going to be $100,000 because that's where the profit to the bank lies, because a reverse mortgage is a mortgage. It is a loan. It does have an interest rate attached to it. And that interest rate, the right word to put in here is it's accumulating throughout these 10 years in this example, right? So it's possible, it depends on the program that I have and how much money I used and all that. But let's say that 10 years later, the bank tells me, Mr. Lopez, you know what? Your debt is now $145,000, right? Well, if that's the case, right, and it varies, obviously, once again, depending on interest rate and how much money I use. There's people that leave a lot of the funds in the line of credit. Obviously, that keeps your loan amount lower. We'll get into all of that. But if my debt is $145,000 10 years later, guess what? It's $145,000 regardless of what the property value is, right? So whether my property value went up and is now $300,000 or my property value went down, in both examples, my debt is going to be exactly the same amount, $145,000. So let's talk about the first example, and then we're going to definitely dive into the second example. So in the first example, my property is now worth $300,000, and I decide to sell my property. Or maybe I'm not around any longer, right? And my property has now, the title to my property has now been transferred to my heirs. And let's touch on that because it's very important to understand that when a property owner opts for a reverse mortgage and has a reverse mortgage loan, the day they are no longer around, the title to the property will pass freely to the heirs. The heirs receive the title to the property. So the one thing the heirs can't do is buy the property because they already own the property. You can't buy what is already yours. So I always get that question from borrowers. Well, can my heirs buy the property? And I say, well, they're not going to buy the property because they're going to own the property. The day you're no longer around, title will pass to your heirs the same way it would have passed to your heirs if you didn't have a loan. It really depends on how you structured that, whether you have a will or whether you have a trust or whether you simply maybe named them as remaindermen on title, which is another way of saying that you named them as the beneficiaries on title. So that's entirely up to the property owners and their heirs, but the heirs will receive the title. Now, very importantly, when the heirs receive the title, they receive the property with whatever value the property has at that time, and also with whatever debt the property has at that time. The debt's not going to go away, right? But the banks that decided to participate in a reverse mortgage, right, have to follow the rules to the reverse mortgage. So the banks have to basically, at this point, if the property was inherited, they have to get in touch with the heirs and they have to say the following to them. They say, listen, you are now the new owner or owners of the subject property, right? The first benefit that we have to grant you is we have to grant you time to decide what it is you want to do with the property, right? Depending on the lender, they may grant 3 months at a time. Some do 6 months at a time, but we've seen it be expanded up to a full year. So based on our experience, what we've seen is that lenders, as long as the heir is communicating with the lender, will grant up to 1 year to decide what it is that they want to do with the property. So what can the heirs do with the property? Well, the heirs can decide to, for example, sell. They can sell the property, basically pay off the debt and pull out all the equity, all the profit in the property. That's very popular, especially if there's several heirs and they can't decide what they want to do with the property. We usually see them put the property on the market and sell it, right? But there's other options because the heirs can also decide to refinance the property. They can refinance the existing debt. So in this case, if the property is worth 300 and the debt is 145, they would simply be refinancing the 145. But they can refinance the property to use the property as their primary homestead, but they can also refinance the property and keep it as an investment property. They want to keep it in the family, they can do that as well. Now, we've been doing this, again, for 25 years. So we've had a lot of cases where one of the heirs is actually 62, and they will actually explore the possibility of doing another reverse mortgage, which is also a possibility. But where am I getting to with all this? I guess the main point here to understand is that whether it's the original property owner who decides to, at some point in the history of the property, put the property on the market and sell it, or whether it's the heirs who in the future decide to sell the property, it's pretty simple. If the property is worth $300,000, you're going to put the property on the market, sell it for $300,000. You're going to then, from the sale, pay off the $145,000 that are owed, and there is $155,000 in gross profits, right, that belong to whoever's selling the property at that point, whether it's the original property owner who opted to get a reverse mortgage, or the day of tomorrow if it's the heirs that decide to sell the property. So again, we're going to talk about the flip side of the coin in a second, but in this first scenario, it's basically how the program was designed in a way where everybody has a clear benefit, because the original property owner was able to get $100,000 when they applied for the reverse mortgage. They put that money to good use. Never had the burden of a monthly mortgage payment. They continued with 0 monthly mortgage payments during the entire duration of the loan. And most importantly, continued to enjoy the property, right? So they have a clear benefit, several benefits there, if I may say so. But the bank also has a benefit because the bank gave $100,000 to the property owner, but the day that the property was sold or refinanced, they recovered $145,000. So they made $45,000 profit. Now, in this example, they had to wait 10 years, right? But they still got the money. It's no secret that a lot of very popular banks are really not interested in reverse mortgages. Some of the big name brands used to offer it. They really don't anymore after 2008. But a lot of the banks that do offer reverse mortgages have been offering it for a very long time and have very close relationships with the program and with FHA and really understand it. So you tend to have a lot of lenders that really just specialize in reverse mortgages. But there's a clear benefit to the lender in this example because they were able to profit $45,000. And guess what? The federal government, FHA, actually has a clear benefit here too because they designed a program that, works, and they had to invest zero in this first example. It didn't cost them a single dollar, right? But we have to talk about something else now. We have to talk about this second example right here, right? What happens if the day I'm no longer around, I have a reverse mortgage and 10 years go by and I'm no longer around, what happens if my heirs inherit the property and it's 2008 all over again? What I mean by that is that for some reason property values have dropped, and now we're talking about a scenario where my property value is only $100,000, but my debt, my reverse mortgage debt, is $145,000. So I'm basically underwater, or, more precisely, it seems like my heirs are underwater, right? So at face value, this looks like a very serious problem, right? Because now my heirs not only are not able to pull out any profits, any equity from the sale of the property, but also they are literally underwater. May have they may jump to the assumption that there's a deficiency here, right, and that they can actually lose some money, right? Well, this is where the non-recourse aspect of this program kicks in, and we're going to write that down because that is an important factor. Non-recourse loan. Okay. So what does that mean? We always understand that FHA designed this program to assist property owners that are in retirement age. But what's the involvement of FHA in all of this? Well, FHA tells lenders, go ahead and offer this loan. Please participate in this program, because we are really assuming that the first example is the most likely example because of, once again, inflation. We understand that property values tend to go up. But if this second scenario occurs and the property value falls below the amount of the total debt, you, the bank, this is FHA talking to the bank, you, the bank, are not going to be responsible for the loss. The original property owner, if they decide that they want to sell and they find themselves in this situation, they're going to not be responsible for the loss. And the heirs are definitely not going to be responsible for the loss. They had nothing to do with the loan. Heirs don't participate in the application process when the borrower is applying for the reverse mortgage, so they have nothing to do with this. But we, the federal government, have insured this loan, and we will cover any deficiency or loss that exists in a reverse mortgage. That is the non-recourse aspect of the loan. So how does that specifically work? Well, let's dive into it. If my heirs actually inherit the property and they are in scenario number 2 where there is a deficiency, they will have an additional option. They can get the property appraised by an FHA appraisal just to show that the property is in fact worth $100,000. And then FHA actually allows them to refinance the property if they decide that they want to keep it for 95% of the depreciated value, which in this example, 95% of $100,000 would be exactly $95,000. Now, right away, the bank's going to raise its hand and say, wait a second, this is great for the heirs, right? They're, getting the property for $95,000 with a refinance. But what about us? We gave $100,000 10 years ago. We've waited patiently for 10 years. And now that the heirs have the property and they're refinancing, they're just going to show up with $95,000. That's a loss for us. In fact, the reverse mortgage right now is at $145,000. So from 95 to 145, there is a $50,000 loss to the bank. So the bank is not happy about that, right? Well, that's where the insurance aspect of the FHA program kicks in, and FHA will pay. So FHA pays the bank the $50,000 loss. So what does all of this mean to the banks that participate in this program? Number one, what it means is that their investment is insured by the federal government, so they are protected from any potential losses. But most importantly, what does it mean to the property owners / borrowers that are considering the reverse mortgage, right? What does it mean to them? Well, it really means that they have, in a certain way, if you look at it, guaranteed what I call the best of both worlds, because in the first example, if there's equity in the home when the property owner decides to sell or the heirs decide to sell in the future, that gross profit or that net profit after expenses goes into the pocket of the original property owner or the heirs. But if there's ever another situation, once again, like 2008, when market values went down and the market crashed and there is a loss, right? That loss gets covered by the federal government, and the property owners and the heirs are 100% protected. They don't have to pull out a single dollar out of pocket to pay back the reverse mortgage. That is the non-recourse aspect of the loan, which is why I always say that while having zero monthly mortgage payments is what makes the program attractive, the most important aspect or the biggest benefit behind a reverse mortgage is the fact that it's a non-recourse loan. Because yes, I'm getting a loan and I have no monthly mortgage payments, but I know that I'm protected and my heirs are protected in the future when we decide to do something else with the property, with the evolution of the property, whether we decide to buy or sell. So that is what a reverse mortgage is, A to Z. We will continue in our podcast covering additional aspects of the reverse mortgage. We're going to be talking in the future about how we can actually receive the funds. There are different ways that you can receive the funds to a reverse mortgage that are very interesting. Different applications to a reverse mortgage. This is tax-free money. I've seen people use that money for all sorts of things. We're going to be exploring that, and we're also going to explore the application of the reverse mortgage when there's an existing debt. So sometimes properties are paid for when property owners come to us and decide that they want to apply for a reverse mortgage, but sometimes there is an existing mortgage. So we're going to be talking about that as well. I hope that this information was useful, and we look forward to sharing more information with you. Thank you so much.